Hi, everyone, and welcome to the next session for Housing Our Future, Strategies for Cincinnati and Hamilton County. My name is Kristen Baker. I'm the Executive Director of LISC Greater Cincinnati, and we're so happy you've joined us today to hear a little bit about the positive economic impact of affordable housing in our community. We have a really great panel. We're really excited to welcome them all today, and I'm just here to give you a couple quick housekeeping items. Number one, we are having some sort of issue with video, so unfortunately I'm smiling at you right now, but you can't see that. So we apologize that you won't be able to see our presenters, but you'll certainly be able to hear their messages, and so we're apologizing for that in advance. We also encourage you to pose questions using the chat function or the Q&A function. So as the panelists are speaking, we're going to have some time at the end for questions, and we'd love to hear your observations, your questions. What would you like to know a little bit more about from them? And then for our panelists, I'll just mention that if you are not speaking, if you would mute, that would be great, so we don't have a lot of background noise. So with that, I will turn it over to our moderator for this session, Robert Sanders.
Thank you, Kristen. Good morning, everyone. My name is Robert Sanders, principal of Sanders Development Group. And I just want the record to reflect that I do have on a freshly pressed shirt, and just in case you guys are wondering. But at any rate, I'm excited to be the moderator for today's event. And first and foremost, I want to thank you guys for listening in to this important topic that impacts pretty much everybody in the greater Cincinnati community. As you guys know, my firm focuses on commercial real estate development, mainly mixed use and industrial. However, I also formerly worked at the Port Authority as commercial director focused on business district revitalization. And then I also provide consultative services to business owners, investors, and nonprofits, which obviously from a nonprofit standpoint, that takes me, my conversations into balanced development, because obviously every nonprofit is interested in balanced development and equitable development in their neighborhoods. And of course, the big conversation right now is, how much construction costs are, the shortage of labor. However, at the opposite end of the spectrum, for balanced development, you need prices to go down from a rental standpoint and just from a home purchase standpoint. And again, I won't claim to be an affordable housing expert by any means. However, even in my space where, I'm looking to attract retailers and, industrial tenants and things like that, as you can imagine, retailers pay attention to rooftops in various neighborhoods when they make a decision on what communities they're going to go in. Corporations who are looking for office space and industrial space, they look at their employee base and where they're going to come from and how's the housing in various communities. And so for this reason alone, me personally, being in a development space, I think it's important to pay attention to housing. And so obviously when I see the gap and the work that was done with Housing Our Future, I just believe it's something to pay attention to. And then just lastly, on a personal note, I share with most folks that I grew up in Over the Rhine, and I'd be lying to you if I didn't communicate that as a child, I had friends and some family members, candidly, who would be living in some substandard conditions. And so I was fortunate enough to have been raised by my grandmother who, we stayed in public housing, but we had good property manager. And I never once really had to worry about negative conditions or substandard conditions when I came home, which allowed me the opportunity to focus on education. And so, again, while, I just want the audience to understand that while you might not be directly in the affordable housing space, what I hope comes of this is it impacts everybody. And so today we've got really great discussion topics that we're going to talk about today. And we've got a great panel to address those discussion topics. And those topics are economic development incentives that align with affordable housing development, the value of building capacity in local construction industry, the critical importance of investing in the construction workforce and promoting opportunity for employees, resources available at the county to support development, the typical structure of development deals related to impactful affordable housing development, and then common sources of funds invested in development locally. So our panel for today, give me a second to pull this up. So our panel for today consists of Eric Hunn, president of Hunn Construction. Eric is the president of Hunn Construction and has been working in the construction space for more than 25 years. He's also worked with the Port since 2015 in home rehab in their affordable housing program. Eric has been recently working on his own development projects in Lincoln Heights to renovate and sell homes to build up the community and foster innate community pride in the location. We also have on our panel Joy Pierson, Community Development Administrator for Hamilton County. Joy is the Community Development Administrator for Hamilton County Planning and Development, the county's department responsible for ensuring safe, responsible development and redevelopment. Joy manages programs and services funded by HUD block grants, including CDBG, HOME, ESG, and NSP funds. Joy also currently manages the county's CARES Act allocation. We also have on our panel Joe Huber, Chief Lending Officer and Chief Operating Officer of Cincinnati Development Fund. Joe is Cincinnati Development Fund's Chief Lending Officer and Chief Operating Officer. CDF is a nonprofit lending institution that fills a gap not covered by traditional lenders. They provide funding for real estate development in underserved markets and provide funding for facilities and equipment for nonprofit organizations. In addition to underwriting and origination duties, Joe manages deployment of new markets tax credits allocations, secures loan and investment capital, and oversees the day-to-day operations of the organization. And last but not least, we have on our panel Liz Blume, Executive Director of Community Building Institute. Liz is the Executive Director of the Community Building Institute and is a planning professional with more than 30 years of experience in the field. Liz had led multiple city, county, and neighborhood planning processes, always the voice of the community at heart, and with an asset-based lens. And so with that, what I'll do is have each one of our panelists introduce themselves, talk a little bit about their organization or business, and go from there. And with that, I'll introduce Eric Hunn.
Hello. Good morning. Okay, I'm sorry. This is Eric Hunn. I'm the owner of Hunn Construction. Currently, I have 16 employees that work for me. Currently, I'm doing a lot of the Port Authority's rehab work, as Robert has said, and I'm also working on my own development in Lincoln Heights, where I'm trying to build nice houses, but still keep them affordable in the Lincoln Heights area. So I'm just anxious to see what we can come up with, and glad to be a part of the team.
Thank you, Eric.
Welcome.
And next, we'll have Joy Pierson talk a little bit about her role at Hamilton County and some of the different things that they offer.
Our tenant-based rental assistance. And since then, we have invested in 17 projects and 2 down payment assistance programs, and created or have started the construction of 680 units of affordable housing. This investment of $5.2 million has leveraged $111 million, or $19 for every dollar of home or NSP funding. We work exclusively outside of the city of Cincinnati because they receive their own grants from HUD. And some of the projects that we have worked on are Annabelle's Place, which is up on the screen right now, as well as Lydia's House, which is in Norwood. I'm sorry, Annabelle's Place is for veterans. Annabelle's House is is housing for folks transitioning from Lydia's House, transitional housing, and it's full-time, 1-year leases or more. We've also worked with CMHA on West Union Square for 70 units of senior housing. And we are partnering with the City of Cincinnati in sponsoring permanent supportive housing projects, which is allowable with HUD as considered special housing, with Talbert House and Model at Logan Tower, and Tender Mercies and Over the Rhine Community Housing at 821 Flats. The city also, the county, also has community development block grant funding that can be used for repairing homeowners' homes, and we are exploring possibilities for creating grants and loans for homeowners, possibly with a local bank, so that we can leverage those funds as well. Lastly, the picture is up of Habitat for Humanity's a single-family home in West College Hill. And as many of you know, Habitat has changed their model to focus on working intensely in one area for multiple years. So in West College Hill, they're finishing up their 14th home, and in Lincoln Heights, they're finishing up their 6th home. They worked on 20 homes in Lockland over a course of about 5 years. And with that, I'll pass it along to Joe Huber.
Thank you, Joy. Good morning, everyone. First of all, I'd like to thank Kristen and Lisk for putting together this series of panels. Obviously, the free market economy does not address all issues, particularly as it relates to affordable housing. So without planning and intentionality and the collaboration between Lisk and CBI and the port and the county and everybody that's kind of at the table, all of you out there as well, it takes everybody going in the same direction to make affordable housing happen. So thank you I'm really happy to be a part of this, and CDF is happy to be represented. So this is going to walk us through a little bit about who CDF is. And our mission is to provide innovative real estate financing for projects that strengthen low-income neighborhoods and improve lives. And our vision is to be at the forefront of redevelopment plans in Greater Cincinnati to help low-income communities preserve their historic buildings and create vibrant, inclusive neighborhoods. So you will see, even though we were formed in 1988, when Congress beefed up its Community Reinvestment Act regulations and legislation, and the low-income housing tax credits were presented as an alternative to public housing, to incentivize private developers to create affordable housing, quality affordable housing. And so we were created by local banks. You can go to the next slide here, Kristen. We were created in 1988 by local banks to be a conduit, a intermediary for these banks to participate in community development lending. For the first 10 years of our existence, we primarily did debt related to the LIHTC, or the low-income housing tax credits. And so, for those first 10 years, I think we did 1 or 2 loans a year, and then the banks that had created us started getting comfortable doing these loans on their own. And to this day, banks are active investing in low-income housing tax credits and lending for low-income housing tax credits. So when our current president and CEO, Jeannie Gallagher, came to CDF in 1998, we started to broaden our focus from just doing affordable housing to being more of a mixed use, mixed income, community and economic development lender. We are a CDFI, which is a designation of the federal government. We're a community development financial institution. We are not regulated, so we have the ability to make innovative loans that traditional banks cannot. And as Robert said in the introduction, we sometimes are called upon to fill gaps and and provide creative financing for important community development projects. By broadening the scope and becoming a certified CDFI, we became a regular recipient of grants from the federal government to be our own loan capital. So to this day, we have a plethora of funding options that we cobble together from. We borrow money from banks, we get grants from the federal government, we get grants from philanthropic agencies and organizations to make loans that I'll get to in a minute. In 2005, we received our first new markets allocation, which has been important to take us to the next level as a CDFI and do larger mixed use, mixed income developments, which I'll get into in a little bit. And we also became a member of the Federal Home Loan Bank, which allowed us to pass on AHP grants, which are important in the capital stack. Our culture, as it says there, is to be nimble, creative, and collaborative. The whole industry of community development is all about collaboration, as we talked about, whether it's other CDFIs or other nonprofits or developers. We are all working together to make these affordable housing projects happen. We have a focus on affordable housing. We lend into areas that are experiencing population loss or blight. We have a focus on providing financing for nonprofit facilities and a focus on creating fresh food options in food deserts. And we have a focus on promoting energy efficiency through our subordinate loan programs. Something that is common among all of our loans is that all of our loans are part of a broader community-led plan. So you'll rarely see, if ever, CDF come in and just finance a transaction that is not tied into a broader community plan. So that's why it's important we plug into that network. All of our loans must go towards projects that result in substantial redevelopment of the property. And there has to be a reason that our capital is needed versus traditional debt. How does CDF play a role in affordable housing? For one, our staff and our board is really engaged in this network, in this community. As I mentioned, Jeannie Gallagher, she's on the board of Ohio Capital Corporation for Housing, which is primary driver of low-income housing tax credit equity in our region. Sarah Sheets is extremely plugged into the community development world with CDCs and supporting community development in various ways. We have Mo Adlon on our staff, who is on the board of Affordable Housing Advocates. And just across the board and across our staff, we find it, we know it is very important for us to be at the table, just as we are today. We can pass through grants from the Federal Home Loan Bank. We finance acquisition and pre-development costs. We make loans to CDCs. And we also make construction and permanent loans for affordable housing and mixed-use housing. This next few slides are projects that we've been involved in. 821 Flats, I saw that on Joy's slideshow as well. This is a really great development. It was a partnership between Over the Rhine Community Housing and Tender Mercies. And it took a whole lot of funding within the capital stack to make this happen. It's a really great project in West End. Next one is Broadway Square, which is, it's a new market tax credit project that we financed for the model group, but it does have affordable housing as part of it. And the commercial components of this mixed use development are non-chain local businesses that are a huge part of the community development ecosystem. And then another development that we have a slide for is, Lower Price Hill Thrives, which actually was in the news recently. And the community found a way to get this financed. And our role in this was providing upfront, low-cost pre-development financing, and will continue to be part of the construction financing as this great project comes together. Again, that's Over the Rhine Community Housing and Lower Price Hill. So thank you.
Thank you, Joe. Thank you to the other panelists as well. So next what we'll do, Liz and I will go through a few slides just for more context. And then after that, we will go into a Q&A session for each of our panelists. And so for this first slide, it's a quote by Bruce Katz and Marjorie Austin. And I'll just read it and then just make a comment. Increasing access to affordable housing has such broader economic benefit. Lack of affordable housing stands in the way of economic productivity and undermines the fundamental premise that full-time workers should be able to achieve a decent standard of living. And so a couple things stick out to me on this quote. The first being economic productivity, in which I kind of alluded to a comment earlier about substandard living. As it relates to and we'll see a couple slides after this, but obviously if there's a gap in quality housing, to me what that does is opens up the door for substandard living arrangements to be offered by certain landlords. And so obviously again that's a concern for I think our city and just overall. But additionally, when I see economic productivity, it's thinking about the example of the person catching a bus, catching two different buses for an hour and 30 minutes to get to a job, and because most likely there's not quality living close to that job that she's catching a bus to. And so that's just something that stood out to me on this slide. You can go to the next one. The next slide, I'm a picture person by heart, and this is a chart of homes available for sale. And again, it's not difficult to see that the decline in trends from 2015 to 2019 is dramatic. Now this does end in 2019, but you can look at July and see that at some point it was 8,000 houses for sale. Now there's 4,000. Now what would be interesting is to see where that sits today, because as you guys know, if you know anybody that's in the first time home buyer market and candidly even above that price point, there's essentially bidding wars going on for 150 to 180 price point. And obviously, what that does is, that drives the prices up. And so, again, this slide just points out, the shortfall in the number of homes available for sale. And then the last slide that I'll make a comment on is this one. Again, picture's worth 1,000 words. So this is a slide that compares Cincinnati to similar sized cities and a few sister cities. And as you can see, Cincinnati is the black line. And the one thing that stands out is it's been consistently, it's been consistent over the last 10 years or so. But to date, well, at least back to 2018, it's lower than some of the peer sister cities. And again, so that just bodes for conversation around why does that exist? But what I also think is interesting is that, it's similar to Cleveland and Pittsburgh. So it would be interesting to understand what's going in those cities that are similar to our city. And with that, I'll turn it over to Liz Blume.
Thanks, Robert. I appreciate that. I hope you can tell today that our intent is to help reframe this issue of housing production and affordable housing production a little bit. I think we often see this as a challenge in the community. We have in the Housing Our Future plan identified that we'd like to be doing 2,000 units of affordable housing on an annual basis for 10 years. Sounds like a big job, but when you think of it as a huge economic driver, it starts, I think, hopefully to change our thoughts about what this might look like in the region. What you heard Joe say earlier and Joy both talked about all of the outside funding sources, the state and federal funds, CDBG funds, philanthropy, banks. There's a lot of resources focused on this issue. And if we could use those resources to put our construction industry back together again, that would be a really good thing. Next slide, please, Ellie. I too, like Robert, am a picture person. My job is often to bring the numbers to these conversations, which is a role I like. And this one shows you the crash in the construction industry that happened after the last recession and our slow build back. And still, we are not where we need to be. Next slide. Allie, next slide, please. We also talk about livable wages and the jobs. This slide we originally put together to show you that most of the growth in the economy was in jobs that did not pay a living wage. Construction jobs do. So not only are we building houses, we're employing people who can live in the houses that we're building. Both good things. Next slide, please. So this one is particularly telling to me. This is the housing production numbers in metropolitan Cincinnati over the last 20 or so years. And it pretty clearly shows you the cliff we fell off after the recession and the slow build back, and we are nowhere near where we were. So again, if we could employ the resources that are available to do affordable housing to support the construction industry, it would mean more production at every price point, which is a huge economic driver for us. Next slide, please. I said our objective in the affordable arena is 2,000 a year. What you see is back in the day, we were producing about 10,000 units a year as a region, and the pressure that Robert talks about in the 150 to 200,000 housing market is real. We're seeing it in housing work we're doing in Silverton, in Deer Park, in Cheviot, in Norwood. It's fascinating, and what it's going to do is exacerbate the gap even more. I think my final slide, and I know you guys want to get to the Q&A, so I'm going to be quick here. If we did 2,000 units of affordable housing in Hamilton County over the next 10 years, we'd be adding $234 million a year to the local economy, $44 million in tax revenue, and we'd create over 3,000 local jobs. So when you think affordable housing, don't always think, oh, this is a drag. It's in fact a huge stimulus to the economy. So, and the folks that we have on the panel are the people who are doing that work. So I'm going to go back to Robert and let him talk with the panelists about how this stuff happens on the ground in real life. Robert?
Thank you, Liz. Now we're in our Q&A session, and I'll pose the first question to Mr. Hunn, Eric Hunn, because obviously it's a housing production conversation. So Eric, how has construction cost impacted your business? And additionally, how has that in turn impacted your clients?
Well, the impact has been, well, with the COVID and everything, the prices have gone through the roof. For example, 2x4 that I used to could buy for $3.30 is now almost $8 for the same 2x4. Sheets of plywood, everything is, the prices are going up. So it's making it difficult to keep the affordable housing and prices down with the cost of lumber going up. At the same time, everything's going up, but you also have employees that, everything's going up for them. They're doing the same work. They deserve, equal pay or more pay because they're out there doing it still. So the impact of what's going on with the prices is affecting the business a lot.
Eric, has that caused any issues with respect to retention with either you or contractors that you know?
No, not too bad, because the industry right now is booming. There's tons of work out there right now. It's just basically getting the prices right and being able to keep everything afloat without, you don't want to work just to break even. You need to try to make a profit.
Absolutely. And then just additionally, sticking with that question, how has how has the current economic factors impacted your clients? For instance, have you had to pass up on some work because of capacity and cost?
Exactly. Yes, exactly. I'm turning down great jobs that would be great opportunities because not only of as far as the impact of being able to get more people and get reliable people because of basically finances. The money has to keep flowing to be able to keep quality employees and to be able to keep the employees busy. So one thing, a lot of times people want to say, well, hire, but you need to be able to hire also quality people that can do a job right. Because it's one thing just to get a job done, but it's another thing to get a job done right.
Awesome. Thank you, Eric. The next question will be for Joy Pierson. So Joy, what are the typical resources offered at the county level for financing and construction of residential housing?
We have a home RFP actually on the streets right now, and we supply $50,000 in subsidy for one unit, and that the minimum number of units is 4. So we are doing multifamily and single family, and we're doing new construction and rehab. And we are also working with LISC and CBI with communities to develop housing action plans, which are using the Housing Our Future strategies as a backbone for their plans. We hope that some of these communities would like to do more with homeowners and rehab. So if I could wave a magic wand, a year from now, we would have at least 1 or 2 local governments that have pilot programs where we're offering loans and or grants for homeowners to do major rehab on their homes, including property maintenance, code enforcement issues first. But we will be looking for preferred contractors to be doing that work.
Awesome. Thank you, Joy. And then just, I know what happens sometimes, Joy, is, people sometimes, businesses and developers and nonprofits will sometimes, think that they don't qualify or they're not eligible for, some of the things that's offered, like at the county level. Are you able to speak a little bit to eligibility and who should be showing up, knocking at your door for some of these products?
Sure. For the home RFP, as I mentioned, the minimum number of units is 4 units. The reason is we want to make sure we're not working with one developer for one house. So, and for home funds, the government HUD requires that everything in the unit meets housing quality standards. So we can't use home funds to do, for example, external repair because it doesn't address any internal issues that might be there. And it could be something as simple as a light switch plate covering a light switch. So we choose to use home for major projects and the $50,000 capacity, subsidy. And anybody is eligible as long as the work is being done outside of Cincinnati in our 41 local governments. We do ask that if you do not have experience working with HUD funds, that you partner with somebody who does have experience. And we know that we started so late, we waited till 2016, and the home program was around in 1992. So we have a big learning curve, and we've gone from having 12 applications where only 5 were eligible in 2016 to last year having 7 projects, all of which were eligible and 5 of which were funded. So that's the home program, and I'm happy to talk one-on-one with anyone. Then with the CDBG program, as I mentioned, in the past, we had provided only critical repairs, and we'd like to do something more impactful. So some communities have small home improvement repair programs, and it's on the homeowner's responsibility to get 3 quotes, for example, to replace a front door. So we want to change that so it's more impactful. So for example, if the city of Cheviot wanted to do a home repair program, they might have a list of providers that are preferred that they go out for bid, or the county might go out to bid for cities of Silverton and Deer Park and Cheviot, and they all would work together. And we might have a list of preferred providers to replace roofs or to do plumbing to do plumbing work, or to do electrical work. So we're in the process of creating some new programs, and we'd love to hear from those of you in the business to help us to figure out how to do this efficiently, how to do it seamlessly, and how to make the red tape minimal. And I'm happy to talk. We are happy to set up a meeting, a follow-up from this group and others to discuss opportunities to make that work. Does that answer the question?
Absolutely. Thank you, Joy. And just one more piggyback question from the audience was, is home specific to just a city, or is that countywide?
Oh, both of our funding sources are countywide. We're considered an urban county, and we have 41 out of 47 possible local governments participating in the program. So it's the way HUD funding works. There's entitlement cities and then urban counties. So for us, we work with, like I said, 41 out of 47 local governments. We're always trying to get the outlying or local governments to join. We're talking to Marymount actually in the next couple of weeks. But I'm happy to share a map and list of jurisdictions that are covered.
Awesome. Thank you, Joy. So Joe, from CDF, how have you, because I hear, obviously Joy talk about some of the different services that they offer. We've obviously heard about Eric, and then you talk about various projects that you've done and showed some examples in the slides. How have you partnered? Can you talk a little bit more about how you've partnered with other organizations to impact more housing development, whether it be market rate or affordable, just in the housing space, period?
Sure. Some of the other organizations that we partner with to finance these are other CDFIs, like LISC and a CDFI called IFF based out of Chicago. But we partner very closely with the quasi-governmental groups, the Port and 3CDC and UCI, Uptown Consortium. We work with nonprofit developers and for-profit developers over the Rhine Community Housing. I talked about them. And then we're very tied into the Community Development Corporation world. So CDCs like Price Hill Will and Working in Neighborhoods are all partners of ours. And then we do seek and get funding from the philanthropic community. So Hale Foundation and the Greater Cincinnati Foundation. In fact, one of the tools that we have now that is that we're deploying for affordable housing was made possible by a grant that we received from the federal government called Capital Magnets Funding. And that is for restricted low-income housing debt. So we are making those loans for pre-development capital for low-income housing tax credit deals. And part of that program, and part of all of community development financing really, is how are you leveraging those public resources? So those public dollars from the federal government are being leveraged by the Greater Cincinnati Foundation, Robert Killens. We have a large, very low interest line of credit from the Greater Cincinnati Foundation to support pre-development financing. And so, all of community development finance is made possible through that public-private philanthropic combination of funds. Every deal, every affordable housing project has a capital stack that is not just debt. In fact, very little debt can be serviced by affordable housing projects. And of course, you've got different levels of affordable housing. You've kind of got naturally occurring affordable housing, which are units in just distressed census tracts. You've got workforce housing is geared towards those 60 to 80% AMI renters. And then to reach the really low-income renters, you really do need that subsidy from the low-income housing tax credit equity. And that provides about an 80% subsidy to those deals. And that's required because if you keep rents, if the landlord keeps rents low enough that it's attainable to those making between 30 and say 50% AMI, the rents are going to be so low that it absolutely affects the value of the property. And as Eric talked about, the costs of the property are the same or more as any market rate development. So to bridge the gap that exists between cost and value is why you have these tax credit programs. So I think to sum it up, we do partner with all of those organizations, and every deal has a broad capital stack. It's not just debt and then the borrower's equity. It's the CDBG and home dollars that you talked about. It's the tax credits. It's patient capital, and it's long-term capital that we could provide as well. So every deal is different, but the free market does not take care of affordable housing. It takes creative and thoughtful people at the table to bring these resources together.
Awesome. Thanks, Joe. And just one piggyback question to that, Joe. Although this is a housing conversation, can you talk a little bit about how your funding sources and your resources just in general have also impacted opportunities for small businesses?
Sure. So CDFIs across the country have different focuses. Some focus solely on providing microloans and small loans to small businesses. Some focus on nonprofit solely. Some focus solely on affordable housing. We are a CDFI that has a broader mission of community and economic development. And so, yeah, we see as our mission not just to provide housing, but to create vibrant business districts in areas that have suffered decades of blight and disinvestment. So we are active, and that's a real good use of our new market tax credits. So if you think of locally, the area around Findlay Market or in Walnut Hills or in Price Hill, Madisonville, you could go across the board to these first-ring neighborhoods, and these neighborhoods that have suffered decades of disinvestment and blight, where the market is not creating opportunities for small businesses. If we can pass on subsidy through the new market tax credits to the developers, the for-profit and nonprofit developers, who can in turn pass on those benefits in the way of lower rents for tenants, so that as you're attracting businesses to the West End or to over the Rhine or to Walnut Hills, you're not going to necessarily attract a Trader Joe's or a Kroger or a chain retailer. So you have to rely on small businesses that maybe are coming out of a small business incubator at Mortar or out of the Findlay Market incubator. And those startup businesses cannot afford market rate rents. And so the subsidy of the new market tax credit program can buy down the rents of those retail tenants. And in addition, in some developments that we finance for the Wilkeman project is one of those, and 3CDC and Model are the co-developers on that. They are actually taking some of the subsidy of new market tax credits and passing it on to make sure that the affordable residential units remain affordable. So those resources can be helpful to create vibrant, mixed use, mixed income developments, which we fully support.
Awesome. Thank you, Joe. And I know some of you are probably wondering, why in the heck would Robert ask a small business question? And we're having a housing conversation. And, just hit me as Joe was speaking, when you're talking about, in my example earlier, where the person is catching up 2 buses to get to a job, not such a high wage. Imagine if that person is going to, the same type of job in their neighborhood, because now all of a sudden they don't have to catch 2 buses to get to Chipotle in Kenwood. Instead, they can walk to a similar non-franchise restaurant in their neighborhood. Now, how much more time have they gotten back to give to their family with respect to that? And so thank you, Joe, for responding to that. Joy, I didn't know if you wanted to, Joe talked a little bit about his impact of business as well. do you have a comment on how you impact small business also as part of this? And just for the record, too, developers are small bit. There's some small businesses too.
Thank you. I was looking for data on the number of jobs that are created per unit, and I didn't get there, but I do want to make that connection with our projects. The addition of 680 units in 5 years is clearly an economic impact and a job creator. We do, with HUD funding, reach out to MBEs and Section 3 employers. And just a quick little, I guess, description of a Section 3 employer. This was a act in the public housing world back in the 60s and 70s that was a HUD regulation that required housing authorities to hire their own residents. And this was expanded to other HUD-funded programs so that we are required to reach out, and there is a 10% bidding advantage for businesses who certify themselves as Section 3. And that means you're either owned by somebody when they started the person was a low to moderate income person, or they are hiring people who, when they get hired, are considered low to moderate income. And in Cincinnati right now, in Hamilton County, low to mod for a single person is $48,000. So clearly, this is not poverty. These are people who are getting into the construction world who may be making $15 an hour in another job, or $10 an hour, and learn a trade and are able to earn more. So I'm happy to share more information about Section 3 as well. But that clearly, we're gearing our projects, and we're hoping to get subcontractors who are minority businesses, small businesses, and Section 3 businesses. And the impact, the nice thing for us as a county is we're working on smaller projects that are easier entrees for folks to get in the business. For example, there's a demolition, second chance demolition, that started out on a project with the county at Maple Knoll Meadows. And they ended up meeting up and hooking up with Model Group, and their business was able to expand very, very fast and very responsibly with a 2-year project. And now they're able to work on other construction projects and have that relationship and that reputation from a small project. And Maple Knoll was not considered a small project from the county's perspective, but we were able to work with them on some smaller demolition projects with our CDBG program. So we definitely want to assist and educate and hold hands for anybody that wants it to be able to get into this business and grow their business.
Thank you, Joy. And definitely appreciate that response. And so, Eric, when you hear, Joy and Joe talk about the different opportunities, one question, and candidly, just in the space, when I hear about potential funding sources that are associated with municipalities, as a smaller developer and folks that I talk to, the compliance piece comes up, and a lot of folks will candidly dismiss themselves because they're like, well, there's some follow-up documentation that after my project is done, I don't have the overhead to pay somebody to have oversight on. So my question for you, Eric, is does that impact you at all? And then additionally, is there anything else at the municipal level that would help you expedite building more houses?
Well, as far as the second part of your question, at the municipal level, it would be nice if the permit process, it's not too bad. With the COVID going on, it's slowing up a lot of projects because they have cut their staff down. So that kind of slows us down a little bit. But as far as the other part of your question, I've never really looked into those type of funds. I am a minority business owner and also have my other license, but I've never looked into exactly getting the funds for me doing those type of projects, to be honest with you.
And do you mind sharing why you have? Is there a particular reason why you haven't, Eric?
I never knew it was available there, to be honest. So I've basically done all my business working off of of contracts that I've received and everything. So I've never really went out looking for, I'm in the process of going through traditional banking now for, lines of credit just to be able to keep payroll and everything going and to add employees. So I'm looking at that right now.
Awesome. Thanks, Eric. And, as it relates to, you kind of brought up access to capital. And, obviously, as a former business banker, I mean, I just know for sure, construction, if you mention that to various credit departments, that's a tough sector to get around from a lending standpoint. Do you know anyone else, or how has that experience been with respect to access to capital from traditional lending sources? And then also, how have you kind of responded to that?
Well, the process that I'm going through right now has been kind of daunting. Which I understand they check every avenue, but it's a long process, and it kind of want to make you give up, but I know I can't give up on the process. So as I'm going through the process right now, it's aggravating, but we're working through it. One things that I'm working on also is working with other businesses that can set you up in business to make sure everything is exactly in line like it's supposed to be. Also, sometimes when you go from a small business to a larger business, I went from, making, under 100,000 or a little over 100,000 to 3 million. My thinking has to change. So I have to set things up totally as a different business entity. So those are some of the things that I'm going with right now. So I guess you could call them growing pains.
Very much appreciated, Eric. And, obviously exciting news to hear about your growth. So outside of access to capital, what resources would help you scale your business? For example, you kind of mentioned setting up your business a little bit differently based on the scale that you want to attain, but like planning services, professional development. What about relationship building? So outside of just the capital piece, what else would help you scale your business?
Well, I guess the planning part of it and working with other contractors or developers, that would help. But the whole process, everything has had to change. When you're doing things totally above board, you got your workman's comp, you got your insurance. I went, like I said, going from a small business insurance to a larger business insurance. My insurance has jumped up like crazy, and I've never had a claim, never had a workman's comp claim. So those type of things are hard to work through.
Awesome. So Joy, as it relates to your role at the county and service and resources at the county, what resources are people typically surprised to learn that the county offers? Like what, if you were to say, what's the best kept secret in the county's toolkit of available development resources, what are people typically surprised to learn?
Well, I was, as I mentioned earlier, the home funds and the home RFP, it's really pretty small to do 4 units of housing and to partner with other developers. So I think right now, the most important tool that we have is to network and bring people together. There are 10 or 15 local governments that are very, very progressive and would like to have more affordable housing and would like to work with small businesses and developers. As you know, we don't have CDCs to the extent that are in the city of Cincinnati. And there are a couple of organizations that are dipping their toes into housing development or have at least one success, like Lydia's House. There's a group in Norwood that is exploring, I think it's Norwood Now, and I'm probably using the wrong name, but they got plenty of support from LISC and CBI, are still getting that, and the county to possibly become a CHODO, which is a community housing development organization. So they will be looking for people like Eric to do continued housing development. So between CDBG funding and scaling projects there and the home funds that are there, we really need to have some low-hanging fruit and some success stories. And we're happy to connect folks with communities that will welcome you with open arms. One example of that was Coleraine Township, where they courted CMHA for several years, worked with the county to tear down some dilapidated, blighted, crime-ridden housing units. There were 8 different 4-unit buildings to be able to build enough land to do West Union Square. Obviously, CMHA is larger, but the fact that Coleraine Township went and asked CMHA, please come and bring affordable housing here, is something you would not have heard of 10 or 15 years ago. So I'm happy to be a resource and help talk with folks and find out, where do you want to build? What have you done already? How can we build upon your success and help to create a plan? Whether that's with CDF or HCDC or other big people who are in the world of bigger picture planning for businesses and financing, or smaller options, working with her, for example, the Housing Urban Redevelopment, like Homesteading Urban Redevelopment Corporation, which is under the port. We're happy to make those connections, and I think that's very key in this environment.
Thank you, Joy. Joe, I would pose the same question to you. What resources are people typically surprised to learn that CDF offers? And what's the best kept secret that CDF is doing?
Well, we try not to keep our products a secret. We want developers and partners to know about all of our types of financing we have. We do structure most of our debt similar to what banks do. If we're doing a multifamily apartment building or a 7-townhome development, we tend to use the same types of discipline that banks use to structure deals, because we don't want to overburden a project with too much debt that would set the developer up to fail. But we can do things beyond the normal scope of what banks do. As I mentioned, we are not regulated. So in the case of where we're lending in pioneering communities, neighborhoods, where the sales haven't caught up yet with some of the momentum that we know is going to happen, we can make exceptions on loan to values where we're not relying on an appraisal. That is something banks cannot do. We also have the ability to do acquisition and pre-development funding even prior to a developer having the actual budget and plans fully fleshed out. And that's something banks cannot do. So I mentioned our revolving fund that was made possible by Greater Cincinnati Foundation, but that is a resource that is very important to our developers who are focused on affordable housing. And then we do offer subordinate financing if there's energy efficiency components. So if a developer is doing LEED certified or green communities, enterprise green communities certifications, we can provide more debt than our typical lending guidelines. And then I think something that is always interesting and something that people are fascinated by is the new market tax credit program that we administer. We have benefited from 9 federal awards, which for a small market like us, we've been more successful than most CDFIs across the country. So that is primarily for larger developments that are over $5 million, but it's a program that we administer that tends to be very interesting for people to talk about.
Thank you, Joe. And keeping with that somewhat, because obviously it sounds like you guys are doing some amazing things in the economic development space. But what are there things that other CDFIs are doing on a national scale to impact housing in particular that you wish you guys were doing or were a part of?
So most CDFIs are lenders like us, but some of them are actually getting into actually co-developing. And so I know the Finance Fund up in Columbus and IFF out of Chicago are two CDFIs that have actually dipped their toe into the world of developing real estate. So we have not gone there. We have been a funder. So we make loans to developers, and luckily we do have some developers here. Again, I mentioned Over the Rhine Community Housing and Model and Penrose and others that are focused on large-scale affordable housing. So we haven't been called upon to do that kind of development, but as we evolve, we're always looking for ways to add value to the community development space. So, one thing that CDFIs do that I think we have made a clear intentional decision to not get involved in is the small micro lending. And that's because I mentioned there's a lot of CDFIs, GCMI here locally, and LISC and ECDI are three CDFIs locally that service small businesses. So we lend support, but we haven't gotten into that space. But again, as we broaden our focus, maybe geographically, maybe in the types of services that we offer, we will always look for ways to innovate, and we will look at national models to do so.
Thank you, Joe. One question from the audience is, and I actually pose this to all three of you guys because I think you're all impacted by it. But obviously there's an inventory gap. And, as you know, the land bank, has hundreds of properties in greater Cincinnati. And so, have you guys have any thoughts around how to better leverage the land bank? For example, they have a nuisance abatement program. How do you guys see the land bank fitting into what your objectives are in a space of economic development? And if you have any examples also too, share a little bit about that.
Robert, this is Joy. I'd love to jump in. I forgot about this. The Green Township a couple of years ago reached out to the land bank, and there was a property that had been vacant for 18 years. And it was a corner property right across from a community swimming pool in the Oak Hills area. And they ended up spending about a year getting through complicated title work, but they got the property for about $1,200, spent about $1,000 stabilizing the roof, and then worked with the county, with our building inspectors and with community development to develop bid specs. We went out to bid. We helped them to go out to bid, and the minimum bid price was $25,000. This was specifically for small developers who wanted to do one project. And they got 4 or 5 bids. The highest bid happened to also be the best bid. So the bid was $50,000. The developer had done one building every 6 or 8 months or 6 or 9 months. And the stipulation was the home had to be sold to a single family homeowner. It could not be sold to an LLC. It could not be a rental unit. So the developer invested $85,000 for a total of $135,000 in their investment. And in the course of about 6 months was the project completion time. They were given a year. And the home just sold last week for $200,000. It's the first time a house had sold for $200,000 in that neighborhood. And my niece happens to live in the neighborhood, and she said her neighbors are so excited. And the end of the summer ended with the for sale sign being up. And so we did that. Now we could have offered down payment assistance for the project, but Green Township chose not to go that route. But they are open to more projects, and we did the work, so we can use this as a template for any community that wants to work with the port to purchase a property, stabilize it, offer it up for bid, and then continue to invest in housing. So we're happy to replicate that and share that information. But it's a great opportunity to have a win-win and start small and work with small businesses.
Thank you, Joy, for sharing that insight. That's really impressive. I didn't know if Joe or Eric, do you have any comments with respect to land bank?
I can add on, and I believe Eric does, because Eric has gotten some properties from the land bank. But I'll say our perspective is it is tremendously helpful for the land bank to acquire property from a community development standpoint and clean the title, and in many cases stabilize the building to get it ready to put back into its best and useful best use. And so we have financed several projects for developers that have acquired properties from the land bank. But, you know, there are many cases where, you know, the price of acquisition, even though it is heavily discounted, doesn't solve the problem, because when you factor in those construction costs that Eric talked about and you look at the end use of the development, can it be economically sustainable without other subsidies? So we have had developers who've gotten properties from the land bank at cheap to free, and it still doesn't work for various reasons, where you look at the ultimate use of the project or how the project is in such a state of disarray. I mean, there's a reason that the developments were vacant and abandoned to begin with. So the economics in that situation are broken to some extent. But the land bank's resources have been hugely important to get some of these buildings and developments back into circulation.
Thank you, Joe. And Eric, did you want to make a comment as well, or?
Yes, I mean, I think the land bank is extremely useful. I have acquired houses through the land bank, and it has worked out for me. And as Joe said, a lot of times you run into things, even though the properties are, or you get the property at a discounted price or a cheap price or even free sometimes, there is still a lot to do to them. And like you said, they're abandoned for a reason. One of the biggest things, even with new houses that you have to run and look at, as far as empty lots, is tap fees. Sewer tap fees are extremely high. And that's one of the things, I mean, they can go up to $20,000, $25,000 once a property has been sitting. So those type of things are the things that you have to look at. But I will say, I'm doing a project in Lincoln Heights. A lot of people said I shouldn't be doing what I'm doing because I'm building it so cheap, but I would like to, you know, special thanks to Cincinnati Development. You know, they took a chance on the vision that I had out there when other banks that I looked at said no, they wasn't willing to do it. So, and also the port authorities, you know, the port authorities, the things that they're doing in the community, I really appreciate what they're doing in the community and enjoy working with them as well.
No, I thank all three of you guys for responding to that, and I think the overarching message in that is again, we're talking about a shortage of housing, and I think in each one of your comments you speak to the ability to bring essentially vacant and blighted properties, you know, back to productive use. And obviously, you know, with there being a ton of property just sitting there, I think having some intentional discussion around how to further leverage the land bank as a resource is going to be huge to closing this gap. We're about at 11:10. I think this is supposed to end at 11:15. And so I do have an important question that I did want to pose again to all three of you as well. The question is, if you had unlimited capital and resources, where would you allocate it, knowing you could provide the biggest impact in the shortest amount of time? I'll call on Joy to go first.
Wow, that's a hard one. My gut reaction is we would go to the community that is the most ready. That and some of that is they have a plan together, they have clear understanding, comprehensive plan, political will, they know what they want, they know what they need, and are nimble enough to get things moving quickly. So and we're gonna be finding out where those areas are, with the development of the action plans that I talked about earlier. The other possibility would be to go somewhere where the land is already assembled and the land is clean, the infrastructure's there, and that again is going to be usually, probably, in a community that's been very intentional and very proactive and helping to co-develop that now is the reality.
Awesome. Thank you, Joy. Eric?
I would say the biggest thing would be if you had unlimited funds. My thing would be to not only grow my business, but to help other people with employment. Sometimes I get people that are looking for employment that, you can't afford really to bring too many on, even though I'm up to 15 employees. But the biggest thing I would say with unlimited funds would be able to help more people get more jobs. And also, you could also look at doing more development. You could get more projects going because, as I said, even speaking of Lincoln Heights, there's over 100 empty properties up there. There's no reason for those lots to be sitting there empty when they could be developed and help bringing back a neighborhood.
That's a really great point, Eric. And a real quick piggyback question to that, Eric, is if you had, again, unlimited resources, is there enough labor to build houses on those 100 lots in a feasible time frame?
I would think there would be. Sometimes, like I said, once going back again, sometimes you need more than just a hand. You need a quality person that has experience. And what I've found, even with my business, to have quality guys that can do experience work, you got to pay them well. If you don't pay them well, they're going to move on to somewhere else. So the biggest thing is being able to pay them well what they're worth and make it worth their while, make it worth your while.
Yeah, awesome. Thank you, Eric. And I would just add that having follow-up projects so that when they finish one, they've got something to go on to the next. That stability is pretty important to job retention.
Yeah, exactly.
And Joe, I'll leave it to you to answer, to give your answer to wrap things up.
Okay. Sure. I do want to kind of underscore something that Joy just said, which is that money flows to those communities that are organized and have a plan. And that is true with whether it's local or state or federal dollars. For a community to have its own plan driven by organizations like CBI and LISC and to be ready to utilize resources, that's where the money flows. I would say if we could create a giant pot of money out of thin air to put into the economy, I definitely think more resources to the low-income housing tax credits are needed to be able to allow nonprofit developers like Over the Rhine Community Housing to create affordable units. There should be resources that go into small businesses in business districts that are fragile right now. And then, of course, the individuals, people that are living on the margins that are just questioning where in a normal economy, where's the next paycheck coming from? Right now, the stress and the reality that people on the margins are going through, they need help. And so hopefully those resources are there. And thank you. I'm again really happy to be part of this panel and look forward to more conversations with all of you.
Robert, this is Joy. Can I jump in?
Go ahead, Joy. Go ahead, Joy.
Okay, I failed to mention an organization that's doing work in this arena to speak to Eric's need. The Building Value is a subsidiary of Easter Seals, and they have a job training program that folks attend anywhere from 3 to 9 months, and it helps with job readiness, but it also helps with construction skills. And we're hoping to partner with them because they have the money for job training and they have the money to help employers to take somebody under their wing, but they don't have projects. So one of the things we're looking at is the possibility that they would work on some projects with us and acquiring property through the land bank to get a property and fix it up. And that might just be doing the roof. It might not be a full redevelopment like I talked about with Green Township. We started on a project in Silverton, and it turned out that the property was in such disrepair, stabilizing the roof wasn't going to make any difference. It was probably going to have to be a demo. But that's something that we want to explore. And they have several programs. I'm not doing them justice in this quick description, but they partner with small businesses like Eric. So I'm going to look into that more and follow up because we definitely know we need more people in these trades, and we need more hands-on job training. We need to connect the dots between the need and the resources that are there and the people that are there, and providing the funding for the materials and providing the buildings. So I just wanted to comment on that.
Awesome. Thank you, Joy. And I want to thank each one of you, Joy, Eric, and Joe, for joining us and having some candid conversation. It's really important to begin having these intentional conversations in order to close this gap. And I also want to thank everyone for allowing me to moderate this event. And with that, I will turn it over to Kristen to take us out.
Great. Thanks, Robert. Thanks for everyone who stayed with us through the session. And I hope you learned something, have some new questions. Please don't hesitate to reach out to any of us at LISC if you want to know more or are looking for additional connections to these issues. And we hope you will join us for our November session, which will quickly be upon us. And we hope to see you then. So thank you so much and take care.